Imagine buying a stock today and checking its price tomorrow. It's down 5%. You start wondering, did I make a mistake? Now imagine making the same investment and deciding not to judge it for 20 years. Suddenly, 5% doesn't feel like the most important thing anymore. That difference is one of the biggest psychological shifts a beginner investor can make. Most people invest with a clock that is far too short. They want results this week. They want to know whether they are winning this month. They compare their portfolio with someone else's after 6 months and start changing strategies. But investing in stocks isn't really a competition against today. It's a game against time. Think about it this way. A farmer doesn't plant a seed on Monday and dig it up on Friday because there are no apples yet. But that's almost exactly how some beginners treat their investments. They buy because they believe a company will grow, then panic when the market moves against them. This is where investment psychology becomes incredibly important. When you think in days, every market movement feels significant. When you think in decades, volatility becomes part of the journey. You stop asking, what is my stock worth today? And you start asking, what kind of business am I owning and what could it become over many years? That doesn't mean ignoring risk. Thinking long-term doesn't make a bad investment good. It means giving good decisions enough time to work while avoiding the emotional temptation to constantly interfere. Consider someone who invests consistently for 20 years. Their biggest advantage may not be finding the perfect stock. It may simply be staying invested long enough for compounding to do its work. And this is where beginner investors often misunderstand wealth building. The goal isn't to become rich quickly. The goal is to make enough good decisions for long enough that time starts doing some of the heavy lifting. So here's a simple rule to remember. Don't judge a long-term investment with a short-term clock. If you're investing for 20 years, don't let 20 minutes of fear make your decisions. The market will rise, the market will fall. There will be headlines telling you to buy, there will be headlines telling you to sell. Your job isn't to predict every move. Your job is to build a process you can actually stick with. Because the greatest advantage a beginner investor can have isn't a secret stock tip. It's the ability to look beyond today. Think in decades, not days. Because your wealth is not built by what happens in one afternoon. It's built by the decisions you repeat for years.